Hello and welcome back for another round of crypto news updates. Thank you for finding my channel. Thank you for clicking on the link. If you're a current subscriber, thank you very much. If you're not a subscriber yet, if you like this type of content, I would like to encourage you to subscribe because I do try to put out a news piece daily. I also put out crypto tutorials, explainers, and that sort of content. I'm working on putting out a lot of new videos, so I have a long list that I'm working through. So with that, let's jump right in. And before I just jump right into prices, I want to thank everybody who's stuck with me thus far as I'm building this plane while I'm flying it, working through lighting issues, changing out cameras, microphones, and that sort of thing. But nobody's complained so far. I guess I don't have that big of an audience yet, but hopefully soon. So anyway, let's jump right in with prices. As I said in yesterday's video, Ethereum did. Well, I didn't say it in the video, but I saw it this morning. I apologize. Ethereum did hit an all-time high overnight after I recorded that video. It's down a little bit, about 5% since yesterday, but it's still very high, historically. Bitcoin is at 32,529.15, down just slightly on the day. But it's still roughly about where it was at yesterday, a little bit over 600 billion market cap. Looking through the top 10, and mostly down from yesterday as of the moment. Chainlink's still up on the week because it's all-time high from a couple days ago. That's really it on the prices. And in the first piece of news, I've got here a piece that talks about a software company, Sequoia. They're going to offer, it says Sequoia offers employees partial salary in Bitcoin. Now, I can't speak for everybody out there, but if I was offered any of my salary in Bitcoin, I would take it immediately. Even a portion of it would be great. We'll go down here to talk about it. Sequoia Holdings will offer its employees salaries in cryptocurrencies such as Bitcoin, Bitcoin Cash, and Ethereum. The company did, however, state that for the moment only a portion of their salaries would be available in these cryptos. Now, this is just my opinion, but if I could have, I mean, heck, even a portion of my salary, let's say portion I send to savings or something every month, and I could just send it straight to Bitcoin and straight to a wallet address or whatever I have, man, that'd be great. That'd be like having three extra 401ks really, but this is just more mainstream adoption. I think stuff like this will happen. It'll become more common. So, I don't want to spend forever on this article, but it is mainstream adoption. And, if you ever get the chance to take your salary in crypto, take it. But don't do it in Bitcoin Cash. That would be, sorry if you're a Bcash lover out there, but I would never do that. And moving on. And in the next piece, big investors stacked up Ether as prices rose to record high. And no surprise there, strong hands look to have been backing this recent rally to record highs for Ethereum's Ether cryptocurrency. The number of whale addresses, those holding at least 10,000 ETH, jumped to a 13-month high of 1,103 on Saturday, according to on-chain data from blockchain analytics firm Glassnode. More than 35 whale addresses have been created this month alone, and 75 since mid-November. Now, this has nothing to do with Ethereum, but who defines? Somebody's got to know out there, and I'm going to find out. What determines what a whale is in any given crypto? Is it the amount of US dollars that crypto equates to? It's the only thing I can think of. 10,000 Ethereum, that'd be about $100,000. So you got to have, maybe we'll do a what defines a whale episode. And this on the tab right here, I saw this today on Twitter, and I couldn't help but laugh because if you see the If you read this, this is two different articles referencing J.P. Morgan, and this is why the thumbnail says Wall Street hates Bitcoin. So this is January 5th, 2020 by Yogita Khatri. Says Bitcoin's price could reach above 146,000 over the long term, say J.P. Morgan strategists. Now I don't know if these strategists got in trouble or they didn't, or J.P. Morgan didn't mean to leak this out to everybody else, but obviously J.P. Morgan knows that Bitcoin is a good thing. So here's Yogita Khatri 20 days later, actually 19 days, about 23 hours or so. Bitcoin is a risk rather than a safe asset, say JP Morgan strategists. Really? Same company? Same Wall Street company? Look, let's not get it twisted. These companies, the JP Morgans of the world, Fidelity, all these big money companies, they know what Bitcoin is. They know all about it. They know what it's going to be. And all they're trying to do is scare everybody else away from it for as long as they can so they can scoop up as much as they can. That's all it is. But anyway, there's a nice little funny thread here. I'm not going to go through all of it, but don't be scared away from Bitcoin because some big old bank or some Wall Street dude said it was speculative. They're just trying to scare you out of it. And in a continuing theme here, we have a Bank of England governor insists digital payments, but not crypto, are sticking around. All right, we'll go down here. Bank of England Governor Andrew Bailey held the central banker's line against cryptocurrency proliferation at the Davos conference Monday. At the same time, Bailey, a panelist at Davos's digital currency talk, stressed that digital innovation in payments is here to stay. It's just a matter of finding the right design, and governance model for a lasting digital currency. I almost tried to start doing a British accent there, but anyway, I'll say it for later. I didn't want to, if I have any potential, UK viewers, sorry about that. I don't think we're there yet, said Bailey, adding, honestly, I don't think cryptocurrencies as originally formulated are it. Well, Bailey said the problem rests with value and volatility. People want their payments conducted over a stable medium, which the original cryptocurrency certainly lacks. Well, I've said it in previous videos. Bitcoin as a cryptocurrency is still very new. It's in price discovery mode still. And that price is going to go a lot higher. He is right that it's volatile. It's not ready to be a full-time payment network. I'll agree with that. Nobody's ready to price things in Bitcoin, and if you sold somebody something in Bitcoin today, you could be, or if you bought something using Bitcoin, you could end up with the old $24,000 pizza or whatever, $240,000 pizza, whatever it was from the first pizza that was bought. Anyway, the problem isn't that he probably understands that Bitcoin is a good thing and it's a threat to fiat. What the problem is individuals like him. He's of the old world Keynesian print money, fiat is fine crowd. He doesn't like something that he can't control and have some say so over, that he can't print at a whim. So therefore it's not good. So this will probably continue to be a theme, at least every other episode that I do this. So just another guy that's fighting against the inevitable. And here is an article that kind of goes against what the last guy was saying. It's realizing that Bitcoin is inevitable. The title is Bitcoin is Merging with Stock Markets. I'll read a little bit of it here. Bitcoin has now passed the point where any government can seriously think of banning it because the phenomena is becoming part of the real economy. PayPal is the latest publicly traded company to have some of its fortune tied to Bitcoin. An analyst recently suggested $1 billion in revenue may be added to the company due to offering Bitcoin services. That is serious money, so reflecting on their stock price and considerably recently, with Square being another company. Just did a video on Cash App the other day that not only offers Bitcoin services, but holds some of its as part of their treasury reserves. In the financial industry, Bitcoin is nearing a tipping point. Smart money, whether it likes it or not, simply cannot ignore the conclusion of study after study that Bitcoin is beneficial to your portfolio, with one study coming out just this week. We're therefore seeing a curious phenomenon where the likes of traditional influencers like JP Morgan or other banker analysts are being ignored, with market participants giving more weight to hard data. Just had that earlier on in my episode, so it's just weird. So it goes on and on. I'm not going to read the whole thing, but they're making the case that Bitcoin is getting some serious interest from serious companies. It's steadily becoming part of the real economy, and it's not going to be able to be fought. It's here to stay, and it's not going anywhere. All right. Next article here is from Forbes. Bitcoin is braced for a huge 4 billion price earthquake this week. All right, I'll read a little bit here. Bitcoin has struggled to maintain its momentum in the second half of January after its huge start to the year. Of course, we started the year with broke $40,000, but it's come down a little bit since the BitMEX, double spin that wasn't. Prices flatlined. Fears mount about a swelling Bitcoin bubble. I can't roll my eyes hard enough. All right. Now, with excitement building ahead of a hotly anticipated virtual Bitcoin strategy summit, let me pause there. Michael Saylor announced a Bitcoin summit coming in February, where he's going to basically invite in like a couple thousand entrepreneurs, companies, people that have money to invest, and explain Bitcoin to them in February. That could be a huge, if even a little bit of these people go buy some Bitcoin, you're going to see some serious price action at the end of February or early March. Okay, continuing his summit, first week of February, a record near 4 billion worth of Bitcoin options are set to expire this upcoming Friday. The options contracts which allow investors to buy or sell at a specified price within a set time period. It's worth about 3.5 billion. Expires this Friday. If those options get bought and that's more Bitcoin off the table, then you could see the price go up quite a bit again. Not gonna go into the whole article, but there's a couple big things coming for Bitcoin. So just because it went down, it's gonna go back up. Don't worry. All right. And the final article for today, it's actually the link from the previous article. It's the study. It says Bitcoin should be added to an investment portfolio, finds study. After analyzing a portfolio with and without Bitcoin, a study says the robustness check confirms the findings and also advocates for the cryptocurrency to be added to the portfolio. The study by economists at Warsaw University says we want to verify if an inclusion of Bitcoin in the portfolio consisting of different market assets moves the efficient frontier. We check if Bitcoin is able to gain some substantial weight and improves the risk-return profile of the whole portfolio. The empirical analysis is based on the comparison of the portfolios with and without Bitcoin in the context of two Markowitz criteria of optimization, whatever that is. And then down here it says, adding Bitcoin to Markowitz optimized portfolios as well as to an equally weighted one improves their performance. The results are strong enough for these economists to recommend the inclusion of Bitcoin in an investment portfolio. It's slowly but surely. You know what first they fight you, then they whatever, then you win. Can't remember. It's the Gandhi quote. All right. I did have a couple other pieces to possibly include in here that talked about how much it would cost to 51% attack Bitcoin and a whole bunch of other tokens. And also there was a nice piece on worldwide shortage of video cards, mining gears, and all that. But I think this video is already it's starting to feel kind of long. So I'm trying to keep between 10 and 15 minutes. If you've made it this far, thank you very much. If you enjoy this type of content, if you like a quick hit of daily crypto news, stay subscribed. I'll keep serving it up. I'm also going to do crypto tutorials, exchange reviews, app reviews, hardware, software wallets, you name it. Different breakdown of different coins, what is proof of work, proof of stake, all that sort of stuff. So thank you for being here. Please come back. And until next time, I'll see you.